Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, May 6th, and it's around 6 p.m. New York time. So there's not a lot on the economic calendar, but tomorrow we will be having that Fed meeting here in the U.S. That will take place at 2 p.m. Eastern. Expectations are for rates to remain unchanged. Everyone, of course, will be listening to what Jay Powell has to say during the press conference, which follows 30 minutes later. Then on Thursday, we're going to get initial jobless claims, and we're going to get unit labor costs and productivity. We're also going to be getting a 30-year auction, and that's going to pretty much wrap up the economic data for this week. When we just take a quick look at the markets, there's obviously been a lot of volatility across the FX space, but really, when you look at the euro, it's been kind of just moving sideways now for 2 weeks now, really just moving in this sideways direction between 1270 and 114. So it's really not giving us much in terms of what it wants to do. Again, when you kind of look at it and you take a look at the momentum indicators, those are still fairly positive, although you can say that they're starting to show signs of momentum getting lost. And so if the euro were to undercut this 112.70 region, it certainly sets up a move back to this 111.90 area. It could even result in the euro moving all the way back to 109.5. And again, thinking about where the euro is, and until really it gets above 114, 114 and a half even, you have to kind of think that maybe the euro favors downside just because of the loss of momentum, and there's very clearly very strong resistance here. If we were able to get above this, that kind of changes the picture. It opens up the doorway, obviously, to higher levels, but you really need to see that break higher for confirmation. When you look at the pound, it's a similar sort of setup here. You could almost begin to make a case that maybe there's something going on here, like a head and shoulders pattern forming with the neckline at 132.70. Again, it's a little bit of a stretch just because it's such a small time frame, but you can see it a little bit more clearly here. Again, until you break support at 132.70, until you really break support, though, it's really just, a possibility. And clearly resistance at 134.30. So right now, again, like the euro, the pound just basically trending sideways. I guess if you have to favor a direction, I would favor a direction of the pound being weaker. That would probably take some positive news on trade. It would probably take maybe a more dovish than expected BoE. It might take a more hawkish than expected Fed. Outside of that, again, it's really not giving us much of a signal. It's really the same for the yen, but at least on the yen, we can kind of look at it and say, well, there's clearly been a very well-formed downtrend in the yen now that's been in place for a pretty long period of time. We did try to break out a couple of weeks ago. That obviously failed. We tried to break out again. That failed. So this is clearly your big level of resistance. If you want to add one other layer here, the 10-day exponential moving average, we did drop below that. So it's possible that we're still looking at a downward sloping trend, which would suggest further strengthening of the yen versus the dollar. But really the big thing here is that this yen has really found some meaningful support at this 140.60 area now on a couple of occasions, at least 3 occasions. And so, again, we're kind of just looking at a situation with a currency just treading water as it decides what it wants to do. At some point, it's going to do something, though, because it can't keep trending lower and keep finding support at 140.5. At some point, it's going to either have to break that support or it's going to have to reverse back. It's really not all that dissimilar from what we saw in oil prices, because oil prices were holding really firm at that 66 level. Now that 66 level has broken, we found support around 57.70. And now it looks like we made another attempt to get below it. Here you can see we're bouncing now above it. Here's your 10-day exponential moving average acting as resistance. So until we get above this 10-day exponential, which could come, who knows, maybe tomorrow, you're looking at the trend being lower again, but with support at this 57.5 area, with a break of support setting up a move back to 52. In the meantime, I think resistance really limits your upside here, 63.90, and I think it's going to be very difficult to get above 66, given how much of a support level it had been in the past. I can't imagine it being very easy to do. So I think you have to be very careful with your upside, because I think that could be very limited. Gold is making another move higher here. We saw gold break support, move down to this 3,200 area, and now it's made a really big move the last 2 days. And again, we're kind of just butting up against this upper area of resistance right now. We have a failed breakout attempt. We're going to watch this to see how this develops, because clearly we could be seeing a couple of different things going on. The first thing being is that you have, a break of a major downtrend, so that's obviously bullish. If this was some sort of flag pattern, you could begin to project out where gold could be heading just by measuring from here to the breakout, and you could be talking about gold moving up to about 37.50. If this is going to form into a double top, well, then you're talking about something completely different, because you could be talking about gold going significantly lower. Again, with this being your neckline in this region, would mean that you'd probably be talking about gold potentially going all the way back to 3,000. So right now, I think gold is in a test phase. I think you just have to wait and see which way it's going to break. Obviously, if you can clear and you can stay above this high, and you can find support at the 10-day exponential moving average, it would suggest to me that we can move higher. Likewise, if we were to see gold break below 32.50, I think you're looking for much lower prices, probably back to around the 3,000 range. And given that the momentum factor is potentially signaling a change in trend, you have to be very mindful of this potential double top pattern forming. When we move over to the DAX, that's actually managed to move all the way back up to the previous all-time highs, although we didn't quite get to a new all-time high yet. We're pretty close. So all the losses we saw following the tariff news has been erased, and you're seeing a lot of strength in the DAX. It's really a difficult chart to read at this point. I mean, clearly the uptrend in the DAX is very strong, and I would think that if you break out above the 23,450 area, you could have some big room to run here, maybe 23,700 or so, which would be the upper end of the Bollinger Band. There's really not much to even measure here, but you can clearly see the breakouts happening in this, like these chunks here, where you have this breakout, and then you had another breakout period, and then you had this other one here. So there could be a couple more days to run to the upside. I mean, if you fail here, I would think that would be pretty negative, because you'd have what would be nearly a triple top in place. I mean, the RSI looks fairly bullish here with an RSI at just 65. You're not really even overbought based on where the Bollinger Band is. So my guess would be that you probably have some further room to run here. Clearly, if you break the uptrend, you look for support at the gap fill around 22,520. When we look at the FTSE, very similar sort of setup here. Very strong move higher. You can see all the days in a row that it's been up. Clearly, we're coming to an important area here, though, with resistance at this 8,600 region. Clearly, momentum suggesting still further upside. Bollinger Band suggesting further upside. Clearly you can see a move up to further levels as well. I mean, copper's been moving up, and so that should really be telling us a little bit about where the FTSE may be going, and that may be suggesting it's going higher still. When we look at the NASDAQ's in a really interesting position. When we remove the Bollinger Bands, you can see a couple of things going on. Here's your 200-day moving average. You can see we hit that. The NASDAQ hit the 61.8% retracement level. We also have some resistance going back to the August 24 peak right here. This could be a potential reason where you see the NASDAQ give back some of these recent gains. We've just been really seeing the European markets really separating from the U.S. markets, and that could just be because of the differences in policies that are beginning to emerge, with Europe more committed to spending, while the U.S. is, engaging in this trade war. And so it could very well be that there's a lot of money repatriating and returning to Europe and being invested in the markets over there. So when we look at the NASDAQ, I mean, it's in a position that it could move lower here. And you can clearly see if this were an uptrend, we're getting very close to potentially breaking that uptrend. And that would mean that we potentially could move back lower. And there are open gaps all the way back down to around 18,300 or so. So I would continue to watch to see how this develops. This really looks like an ideal spot for the NASDAQ to put in a short-term top. It's really a very similar picture for the S&P 500. Your 200-day moving average, 61.8% retracement level. Here you are at your July 24 highs, your August 24 highs. This seems like a really ideal spot for the NASDAQ, the S&P also to start giving back some of its gains. I mean, if you want to get cute with your technical analysis, you can call this an inverse cup and handle pattern. Clearly, the handle was broken today, if that's the case, and we need to watch because you can clearly get a retest of the break, and that could result in the S&P moving back up to 5670 or so, maybe even 5700. But if this is a break, it would suggest we're going to be moving sharply lower in the S&P. When you look at the Dow, also very similar sort of setup. You clearly have a big area of resistance. Your 200-day moving average much higher than where it is on the S&P and on the NASDAQ. You haven't really quite reached the 61.8% retracement level. So, but again, when you look at the overall pattern, overall formation, it also would probably suggest that if we're probably at an ideal spot to maybe begin to move lower and to fill back up some of these lower levels here that are open, maybe around 39,160 or so, which is where there's a giant gap created there as well. Anyway, have a great rest of your week, and we'll see you next. Bye.